is Caitlin with the Florida Homestyle. As you can see, I have some visitors with us today, so we're going to do a little Q&A. I'm going to let them introduce themselves and see exactly what we're going to talk about today. So, who are you guys? Why are you here?
Thanks, Caitlin. We appreciate the opportunity to be here with you today and talk to some people out there that want to get some information. We're Chris and Amy Setzer from the mortgage firm, Team Setzer, and we are the global branch managers here for the mortgage firm in the Villages, Florida, and surrounding areas. Our company, the mortgage firm, is a direct lender. We were established back in 1995, so we're in our 29th year now. We have about 30 plus branches here in the state of Florida. My name is the local branch here to the Villages. Little background on myself. I've been in the mortgage industry when I got out of the Navy in 2004 through about 2009. I took a break after the recession at that time and got back into the mortgage business in 2017. So I've been with the mortgage firm now for 7 years, and my wife Amy here has joined me back in 2019.
And I joined Chris in 2019 after a 20-year career as a teacher, and it was a great decision. I was a little nervous at first, and I have thoroughly enjoyed this new career change. And I've learned a lot about the mortgage business, and I feel really blessed to be in this position. So,
absolutely. And as far as who do we primarily serve? We serve any buyers, whether it's first-time home buyers or our seniors here in the retirement communities that are looking to get into homes. We serve investors that are getting investment properties. So we have a slew of programs available to you, and we'll get into some of that later in this video.
So then I am assuming that you've now probably guessed it, we are going to talk about mortgages today. And I'm so excited because there's only so many things that I can provide as a realtor, as a real estate agent, that most of these questions when it comes to financing, we really want to direct to our lenders. They are the experts. They are the ones that are going to go over numbers with you. They're going to be the ones that are going to show us exactly what you're going to be approved for when we're searching for homes. So we have a list of questions. They are our experts. We are going to ask them, see what's going on. But some of these questions have been submitted from the viewers, and some of them are just the most common questions that I get from our buyers. So we're going to jump right on in and say, what types of mortgages are out there, and how do I know which one is best for me?
That's a great question, Caitlin. There's so many different mortgage programs that are out there. I'm going to rattle through a few, and then we'll talk about how we find out what the best program is for you and or your clients. As you can imagine, as a full-service lender, we have a lot of different products: conventional, FHA, USDA, VA. As a fellow veteran, we always want to try to help serve our veterans that are out there. We also have reverse mortgage products. We also have non-QM or non-qualified mortgage products.
What does that mean?
That actually is bank statement type loans, things that maybe you have harder income to try to document. And we have some of those products as well. So we have brokered products as well as some of your standard products.
Nice. So you don't always have to have a standard W-2 job in order to get a traditional mortgage.
No, absolutely not. Yeah. And to go into the rest of that, which is how do we find the right product for you? What's your right loan?
Yeah.
We deal with this all the time. We have clients come to us and talk to us about certain types of loans that they've heard about in the market or that they want to use, that they think they qualify for. And then we have to go through the process of pre-qualifying them, getting to know them financially, getting to know them from a credit perspective, and understanding what their goal is. That's the biggest question that we ask over and over again is, what are you trying to accomplish? What's your goal?
Right.
And then let's work backwards from there and try to find the right product, the right program. That's what we do on a daily basis for our clients.
Okay. Amy, anything to add on that?
no, it's just really important that you have somebody who you're working with that asks all the right questions, because without the answers to those questions, you may be put into a product that's not the right fit or the best product for you. So.
Absolutely, and we get that a lot on our end. We would have lenders that just look at the income that you say that you make, and all of a sudden they're saying, here you go, you're approved for this amount, when the lender doesn't actually do all the research and formally approve them, formally look at all their documents. Come to find out their numbers may be off. They may have a larger car payment. They may have student loans. They may have other finances that just they don't think about all the time. And that plays a big part when it comes to your finances of everything that you come in and everything that's going out. So you guys do the research right on the front end, make sure that
Absolutely.
what you're saying is really true.
We absolutely, and everything you said there is very correct. What we want to do is get to know that person all the way around on the front end and ask all of the right questions. And I've learned over the years, if you just ask the right questions in the first 5 minutes of the conversation with the client, and then you shh long enough to get the answers, they'll tell you everything you need to know. To get it right for them.
Right.
But a lot of times, like you said, income is so important, especially for our self-employed borrowers. Our self-employed buyers that come to us, one of the first things we want to do is get their self-employed income up front. Mm-hmm. And this is the way it's told to most of our customers, but if you're a self-employed and you tell me you make $250,000 a year, we have this happen all the time, we have to come back to you after we've reviewed your documentation and say, well, don't ever fire your CPA because they say you make 43. Right. And that's an issue when it comes to financing. So we have to see those things up front and really get to know them.
Yeah, absolutely. We take the time to review all of your documentation and make sure you are putting your best foot forward, and make sure that you have a good understanding of what you do have for income and that we do as well. So
it may take a little bit extra time on the front end. It's not just going to be a quick phone call of, hey, I want to buy a house. It's valued at, the house I want to buy is $500,000. Give me a loan for $480,000. They do have to verify. They do have to do a couple more steps. So just be a little bit patient. It doesn't take that long, I promise. But we will just have to make sure that we know what we're talking about.
Yeah, and just to touch on that, Caitlin, normal pre-qualification, that we mostly work with a lot of out-of-state buyers too, and local people as well, but it's 30 minutes to an hour for us to get back to you for the majority of people. But if you have things like self-employed, you have other types of documentation that are outside of the normal box, we need to review those first to make sure that the numbers that we're talking about are all real, so you don't get into situations like you mentioned earlier, being under contract with what you think is a good pre-qualification or pre-approval letter and not being pre-approved. Come to find out there's a problem 2 weeks before closing and final underwrite. That's just not how we operate.
We don't want that. We want everything to be laid out right at the beginning. So a little bit of extra work, but it means that you're going to have a stronger offer. You're going to have a stronger approval letter. Everybody knows that when we are all working together, that this is going to be a solid loan product. So the next question I have is from Victor, and he says, I see rumors out there that are saying we cannot use a VA loan when buying in the villages. Is that true?
That's actually completely false in some ways, and in other ways it's somewhat true. So let's talk about the true part first. If you're buying new construction in the villages, currently they do not allow for the developer who is selling those new construction homes does not allow for VA and FHA home loans.
Okay.
As far as we've heard, if something's changed on that, I'd love to know about it, but so far,
and things change all the time.
They do change, of course.
Keep that in mind.
But when you're talking about existing homes that are not under that new construction contract, certainly you can use VA, FHA, any of the loan programs that we have out here can be used in the villages and the majority of the surrounding retirement communities as well.
So with the VA loan, we can do 100% down, or with the VA, are we also able to do 80%, 70%? Is it always 100% loan value?
No, not always, not at all. Actually, a lot of times, depending on the client's situation, it may just be better for them to go into a VA loan product. Let's talk about what the benefits are for those veterans first, and then we'll talk about why they might use them. So the VA home loan product, although it is up to 100% financing, if they put down 15, 10, 5% down, they still don't have to carry mortgage insurance.
Right.
And that's a big savings for our veterans, and they still get those great rates with VA without having that additional mortgage insurance because of the VA's guarantee on that loan.
Absolutely.
So it may be better for a client who tells us, well, I've only got 10% that I want to put down in a property. It's going to be my primary. I do have VA available, but I was thinking about going conventional. At that point, it's a no-brainer. The VA loan is not going to have mortgage insurance. The conventional loan is going to have mortgage insurance, so it's a savings for the client to go that route. There's other times as well, from a 100% perspective, when the client does have a little bit to put down, if they're not exempt from the funding fee, and if just to touch base on that one, the VA does have a funding fee for each time that it's used unless you have an exempt status, and that's usually a service-connected disability, Purple Heart recipient, things like that. But if they don't have those exemptions, then there is a funding fee for first-time use and every subsequent use of the program, and that just helps the program keep going. It helps pay in that money towards the VA home loans and those guarantees. But if the client has 5 or 10% to put down, they can reduce the amount of the VA funding fee down by either putting 5 or maximum 10% down is the maximum reduction that they receive.
Okay. So I also get this question all the time because people will hear the differences between a conventional appraisal and a VA appraisal. Is a VA loan more difficult to deal with?
Some of that depends on where that's located and some of the aspects of the property itself.
Okay.
So right now we're talking about the villages of retirement communities. I mean, this is all great homes, well maintained, well taken care of, and the majority of them throughout the retirement community areas are on sewer and also
city water
as well.
Mm-hmm.
So that makes it a fairly easy thing. What the VA is looking for in their VA appraisals is going to be health and habitability issues. And health and habitability issues are things like broken windows, holes in the roof, stoves that don't work where the veteran can't cook. These were all put into act to protect veterans as they're going into a home to make sure that they're not buying what my grandmother back in the day would call a pig in a poke. Okay, so that's what we're looking for. Is they're looking for those health and habitability issues. If you don't have that, you really don't have much of a problem. We talked about where it's located, and we touched on sewer and city water for a moment. There are homes out there, of course, that have well and septic, and one of the things that they are looking for is on a survey is the distances between those, because you don't want your septic system near where your well is.
And that makes sense. I can understand that.
Again, health and habitability. So there's a few extra steps to the process, and there are less VA appraisers than there are, or less VA approved appraisers in the whole pool of local appraisers that are out there. There's just so few of them that are VA approved that can take a little bit longer.
Gotcha. Okay.
But we always keep that in mind during the process and make sure that you all know about it up front prior to going under contract.
Right. Okay. Awesome. So we have another question of the villages, like many other 55 plus communities, have a large pool of home buyers that are purchasing their homes in cash. How can we make our financed offer stand out against cash?
I think Amy's got a really good handle on this because we have some great programs that will help our clients get pre-approved in a manner that's even a step above the normal pre-approval that's out there. But I think we want to talk about pre-qualification, pre-approval, and then what this next step is.
Yeah, absolutely. So you have 3 options here, but it's just really important that you have somebody who you speak with that knows what they're talking about, can ask all the right questions so that we can get all the right answers. So the first step is just a simple pre-qualification. That means we've spoken to you verbally, you've told us what your assets are, your income is, and we can issue a pre-qualification letter. But yes, and pull credit. And we can issue a pre-qualification letter based on that, but we have nothing to support what you've told us. So the next step to that is pre-approval. Pre-approval means we've asked all the right questions and now you've provided documentation to support what you've told us. Chris and I then review that documentation to issue a pre-approval letter. But the third step and the best step is to go into our TBD approval.
To be determined.
Which means to be determined. You have not found the right property yet, but you provided all the documentation. We have done our due diligence, and now we're going to submit your file to underwriting to be reviewed. The underwriter will review all the documentation that you've provided and issue an approval letter based upon finding the right property. And that just gives you a great leg up on putting in offers on homes, because you're not just giving a pre-qualification letter, you're giving an approval letter.
Yeah, and just to summarize that a little bit, or add to it, is that the TBD process, once you're under contract and you go through the normal processing, you're going to have 2 different underwrites. You're going to have your initial underwrite, so the underwriter's going to review everything. They're going to let us know you're conditionally approved, and based off of you can provide these other few pieces of documentation, then we'll get towards final approval, and that usually includes appraisal, things that we're waiting on. So there's still 2 underwriting processes. This means that TBD underwriting means that you will actually have gone through that first underwrite process completely, and the TBD is pending a residence. It's the home's to be determined. The person is approved. Now we're just waiting on the home.
And all of that then can happen pretty quickly, because now we don't need to go through that first level of underwriting again. Once we found that house, we've cut out that first step, so we may be able to get a little bit more competitive with the cash offers by cutting down closing time.
That's
Is that correct?
Yeah, we can definitely cut down closing time as long as people are willing to work with us to get us all those documentation.
Absolutely.
So that we can put it through an initial underwrite.
And there are third-party services that do take some time. So if an appraisal is needed, that we have to wait for that to come back and for that to be reviewed. If we get a property inspection waiver, that can simplify the process. That means we don't have to have an appraisal. Our underwriting system agrees with the value of the home and does not require an appraisal. But there's also third-party services that come through from the title company that have to be ordered. So there's a lot of factors that go into that. But yeah, absolutely, having that approved underwriting of your documentation can definitely expedite the process and simplify things.
And that can make you more competitive when you're out there up against cash offers.
And do you guys get to decide when you can order the appraisal or not, or is it a totally different system? Does it just depend on how much money they're putting down? How is that determined?
It is an automated system, so it actually goes through and figures out based on the amount down, the contract purchase price, local sales in the recent area, even using the subject property as one of those local sales if it was sold in the recent years. It determines. We don't have a determination on that.
So there's no standard rule of if you put 30% down on a house that you can have an appraisal waiver, or 50% or anything like that. It just has to fit the computer's numbers to say this works or it doesn't work.
That's correct.
Okay, good to know. I've learned that. I did not know that before. I thought it was just depending on how much you put down. Banks will say, I don't care.
If it was up to us lenders, we just, we don't want to do that. We want to make sure that a system is actually going through and making those decisions for us. Now, we have been asked in the property inspection waivers, can you ever lose one? Yes, you can. So you can start off with a property inspection waiver, and potentially there's major repairs that need to be done, and those need to be notated, listed, even paid for with seller concessions, things like that throughout the process. And that can say, oh wait, now there's major repairs. Now we're going to ask you to have it, even though you had an inspection waiver, we're now going to have to ordered.
I see.
So that could slow the process.
Things can come up, as it always does. So for people that are newer to the Central Florida area, they may not have heard of this crazy thing about a bond that we have on most of the houses here in the villages. So is it an additional cost to purchase the home here? How does the bond get wrapped up? Is it on your mortgage payment? Is it in your taxes? How does that affect purchase power?
Great. We get that question a lot because people don't understand the bond. They're like, I know the taxes, but we need to know about the bond. I don't understand. It is literally part of your taxes. It is the non-ad valorem portion of your taxes. So when we're talking about the villages, that's the only place really locally right here that's going to have those bonds. The bonds are actually put into place by the developer when they're building the homes, and they're usually 30 or 40-year amortizations on those bonds. And when I say amortizations, now we start thinking about interest rate, because they do have their own interest rates. Some of the last ones that we saw were, getting close up in the sixes. And realistically, whatever that bond is, 30 or 40,000 over 30 years, you're paying a lot more for the house in the long run. Most homeowners, however, don't normally pay those off. They normally just pass them on to the next home buyer, and it continues throughout its full amortization. But it is part of your non-ad valorem taxes, and when you're looking at any of the county websites, so the villages in a tri-county area, we got Lake County, Sumter County, and Marion County. So you can go to any one of their websites, or Google, if you will, Marion County Property Appraiser.
Easiest way.
Right, and you'll just follow that link, put in the address, and you can look at the taxes immediately, and you can see the non-ad valorem portion. And what that does is it breaks down that bond into an annual, and shows it in that non-ad valorem portion, along with fire and rescue, and potentially trash if that's in there too.
Right. So does it make a big difference for a house that already has a bond paid off versus one that still has a remaining bond, let's say $1,500 annually, as to what you can afford purchase power?
Absolutely. Amy, you can talk about that.
Absolutely, because the higher the tax bill is, same with homeowners insurance, those things can affect your debt to income ratio, and so you have to be within qualifying ratios to purchase that home. So you might be looking at one $350,000 home, and your debt to income ratio is fine because the tax bill is lower, but another $350,000 home has a large
bond on it,
bond on it, and your debt to income ratio is just way out of whack at that point. And of course, we can always look at other ways to get you into that home. Sometimes it's just paying off a small debt that's on credit, or taking a look at your income and making sure that we have all the correct numbers on your income.
And that's something that you guys will do at the initial process and be able to see right off the bat of, we're really close and pushing our numbers here. If we're going to make this purchase price work, it needs to have no bond, or you need to have this car payment paid off, or anything like that.
Certainly, which is one more reason with pre-qualifications, pre-approvals, we want to custom tailor their letter to their offer, so that we have the chance to take a look at what kind of home it is. Does it have additional tax stuff, burdens in there that we're not considering yet? And we want to make sure and go through all of that process for them so they can really understand what they can truly afford.
Nice. So I guess that kind of leads perfect into my next example of why would somebody want to use you guys versus using like a Rocket Mortgage, a Loan Depot, Wells Fargo, any of those big national brands. How do you guys differ? What do you guys offer that they can't?
Well, I think Amy has a good handle on this, but just to add to the front end, we save deals from large online and or out-of-state lenders on a regular basis, because of the simple fact that they're not going through those front-end questions. They're not asking the additional questions that need to be asked when they get the answers for those, and that's what really separates us the most is because we live and work here. We know that when we're going to the grocery store, we're probably going to see our client.
Right.
So we want to have a really good impression, and we want to take them all the way through and give them the right information.
Yeah, and absolutely. And oftentimes when you're talking to banks or online lenders, you're talking to an application taker, somebody who doesn't know all the ins and outs of the mortgage process and doesn't understand what questions they need to ask and what information they need to make sure that they've gained or gotten from you, so that they can gain a good understanding of what the best path forward for you is. So a lot of times our clients will get into situations with these lenders that they don't really qualify. So it's really important that you make sure you have somebody who knows what to ask. The other benefit to having us versus one of these online lenders is all of our appraisers are local. We have a relationship with all of the local title companies, the listing agents, the buyer's agents, and we know the ins and outs of this market, and so do our appraisers. If you've got an appraiser coming from Jacksonville to appraise a home in the Villages, they don't understand all the differences between the homes here, whether it has a golf cart garage versus no golf cart garage, if it's on the golf course versus not on the golf course. There's a lot of aspects that change the value of the homes here that an outside appraiser would not understand. So,
and making sure that we really touch on that is, like she was saying, we need to have good relationships with the title companies, listing agents, buyer's agents, all of those. When we have local lenders, I can tell that seller, listing agent, all of that, call my lender. They will tell you how well approved they are. They will tell you all of the specifications. I can't get a hold of anybody from Rocket Mortgage, ever.
No.
You're going to be put into some circle, and they're going to say, I've never talked to this person. Talk to Stan, talk to Joe, talk to Mary, all of that.
It's actually fairly likely that the listed agent that's on the home in the local area here at least knows of us.
Yeah.
If not, has worked with us before. And we have zero issue whatsoever, and we want to reach out to the listing agent when they're making an offer and just let them know everything's good.
Yeah.
We've got a great client here with excellent credit, good assets that have already been reviewed, and we've seen all the documentation. I really can't tell you how often there's a pre-approval, air quotes, pre-approval letter that goes out, and we've talked about the difference. Pre-qualification is credit and verbal.
Yeah.
Pre-approval is credit, verbal, and all the documentation to prove what we talked about verbally. And yet they're walking around with a pre-approval letter in their hands, and when we talk to them, they're like, well, no, I didn't provide any documentation. Mm-hmm. How do you have the word pre-approved on your letter?
Yeah.
Yeah, so
yeah.
And even
just that simple.
With bonds too, if outside lenders don't know about the bonds. This is something that you always have to talk about too. and it can affect your pre-approval letter. And
They also don't understand the difference between the villages as a CDD
Correct.
Absolutely.
Versus a
and
PUD.
other places that are an HOA or a PUD.
Yeah. It's also important to have a realtor who's super familiar with the local area. I can't tell you how many clients come to us with realtors from outside areas to list their homes or to search for the perfect home. And that realtor is not familiar with how the villages works as
Or just
well.
the individual community outside of the
Yeah.
villages even. They
Yeah.
just might not know it because they're from quite
Yeah.
a distance away and don't work here regularly.
Yeah.
Oftentimes the listing agents are from Tampa or Orlando, and they're picking title companies that are in Tampa or Orlando for your closing too, so it's costing you extra money.
For mobile
Or we all
notaries.
now have to
Right.
go down there, or they
Right.
need to come back up, and
Right.
we're getting just as many
And we
questions.
want you to choose local realtors because we come to the majority of our closings, so we want to meet you.
Yeah, absolutely.
And we can't do that if you're closing in Tarpon Springs or somewhere else, okay?
I mean, it could be a fun vacation.
Right,
trip. I mean, if we
right.
needed
We'll
to
make a
go,
weekend of it, sure.
If we do it, we're going to go to Miami. Cruise would be great. Like, let's do a mobile notary on a cruise. I can make that happen.
Put down.
So we are just about at the end of this, which means that we are going to get the most popular question that I get asked, I would say every single time somebody says that they want to talk to a lender, and that is, what are the rates doing right now? So right now, this is end of April 2024, first week of May. What are they doing? Where are we?
There's a lot that gets involved in rates, but right now they've been teetering in the high sixes to mid sevens.
Okay.
That's where most of them are sitting from a national perspective.
Do they change company to company, or is it pretty standard that your rate is going to be within the same realm of the next company?
Nationally, we're all fairly within the same realm. As branch managers, as direct lenders with the mortgage firm, we have the ability to get some things through, get some exceptions, and potentially even price you better as we're looking out there in the open market. So we do have some options for you there. As far as what our rates doing right now, the federal government has been all over the place. We watch this daily. If you're not tuned in, and I'm just going to give them a shout out here, if you're not tuned in to MBS Highway on a regular basis, then you don't know what you're missing. Every day they have daily updates as to the mortgage market, which some of the mortgage market works just like the stock market on the beat of the tom-toms in the streets, okay?
Yeah.
It really does. But mortgage rates change daily. They change several times a day. We get alerts to lock or alerts to float throughout the day on any given market day. But when is the market open? It is Monday through Friday, pretty much 11 a.m. approximately Eastern Standard Time to around 5 or 6 p.m. And it's only on regular market days, so it's no weekends, no holidays, and we can't even lock. The majority of lenders don't lock rates until you have a fully executed contract with everybody's signature on it in hand, and that's when they're locking, because then we know all the details.
Right.
We know the loan to value ratio, we know what you're doing, what you've decided to do with it, we know more about the home itself, we know when your closing date is, because there are different locking periods, and when you start going on extended locking periods, there's a cost to holding that rate and not allowing it to be able to fluctuate with the market.
So you could gamble it a little bit. Say you have a 2-month closing, you had a home sale contingency, that home needs to close first, but you already wanted to lock in your next house. You can either keep your interest rate open, let it kind of just see what happens, or you could lock it in early when you first get your contract, and then you have to pay for it, because now we want to have it for an extended period of time.
It
Correct.
may be a little bit more in cost to be able to get those extended period of time. And that's okay. With the volatile market that we've had over the last year and a half, 2 years, in regards to rates, my recommendation is lock.
Yeah.
We have a float down policy at the mortgage firm. So once we get within 10 days of closing, everything's finally approved. And if rates have shifted at that point and it's at least 0.25% better, we can do what's called a float down for you and actually work on that during the process. We've also had clients come back to us within the process and say, we know what we locked in at originally, but we're thinking about the future and we'd like to buy that down a little bit further.
Okay.
And we can do that too. We can actually adjust that, because when we're locking on a sheet for the day, not just a single rate for the day.
Okay, and you mentioned buy down. I know this is kind of one of those terms that a lot of people have questions about. What is
Sure.
a rate buy down? How does that actually affect your monthly payments versus interest rate that you are initially quoted versus what goes on paper?
Absolutely. So the majority of rates today, and even if you look at most that are advertised out there, they come with some type of points.
Okay.
And that's just a percentage of the actual loan amount that you're taking out that you pay up front. I could just consider it prepaid interest. That's how you have to look at it, is that you're paying some of that interest up front so that you can have a lower rate over the life of the loan. And as long as that works out for you to where you're going to be saving money over time, then it makes sense.
Okay.
What we're always looking at with those is the recoupment period, is how much does that save you over every month, every year, and how much does that initial upfront payment and that rate buy down cost you, and when is that recoupment period? How
Okay.
many years? Because if it's recouped out 7 years and your plans are to stay in the home for 3, it's not worth it.
Yeah.
So,
Keep that money in your bank account on the front end, so then, I mean, your monthly payment may be, what, $50 higher type of thing versus spending $9,000 right off the bat.
Correct.
Type of thing.
Yeah,
Okay.
absolutely.
Does that happen a lot?
That people want to actually buy it down further, yes,
Yeah,
that does
really?
happen, absolutely.
Yeah. Okay.
And it really depends on where they're at. Think about throughout this year alone, we've had the federal government telling us over and over again that they're going to be doing rate cuts, and then they don't do any rate cuts.
Right.
We just went up in the last several weeks,
Yeah.
right? It went up again. And the projection is that they're going to continue to stay up until Q4 at
Okay.
minimum of this year, of 2024. So these people over the last year and a half who've been like, well, they just keep telling us that the rates are going to go down, so we'll just wait. There's a cost to waiting.
Absolutely.
There's an absolute cost, a physical cost to waiting, and we want to see those clients, get into a home. Once you're in control of the asset, it can rise with you.
Absolutely.
But you can't get there until you're in control of the asset. And if rates do go down where they need to be for you to refinance later, that's great. But you want to, on the very first front end of it, you want to get it set to where you don't have to worry about that.
Right.
And that you're not waiting for a refinance.
Yeah. Because I think we got really spoiled whenever we saw all the rates in like the 2.5,
Sure.
3. So I know all the people that I talk to is I'm going to wait until they at least get down to the 4s.
That may not happen.
Yeah,
So
that may
if
not
we're
happen
waiting
at
until
all.
they're
There's-
4s,
but
like,
there's a
Could
cost.
be waiting to 2075. I have no
And there's
idea.
a cost to waiting though, because when rates go down that low, the prices of houses go up, and then there's also limited housing available because everybody's out there shopping.
now all the
so now
buyers-
you're getting into bidding wars.
Yeah.
So there is a cost to waiting. Go ahead and shop now and worry about refinancing and the cost of that later on, because the cost of waiting could increase the home's value by $100,000.
And if you're interested in learning more about that, we have a cost of rating calculator that we can go over with it to help you.
Sure.
And then if you're really interested in how you can save more money in your interest rates, we also have a calculator that we can go through and look at what your average rate is, because so many people right now, because their interest rate is so low on their house, they made that big purchase back in, for the 2s and the
2021,
3s,
yeah.
right? And what do they do now? They've just been going out credit card, getting the car loan, buying the new truck, and what does that do overall to their monthly budget with these short-term financing with higher interest rates that's not a mortgage?
Yeah.
We can see what that looks like for you. So if you have a client who's interested in listing but scared to get out of their 2 or 3% interest rate, knowing what all they're actually spending on everything and how they can get into an interest rate for a new house that they want, so it's a listing and a purchase.
Got it.
Let's look at their numbers. Let's do the calculations for them and see if we can save money.
So another great thing about these guys is that they're not just looking out for the buyer. Like they were just mentioning, if there is a seller that is thinking about selling, they're going to help you on the front end too. They're going to make this a full process of, is it worth it to sell? What can you get out of this? When we have our net proceeds, what debts can we pay off? So for your new house, we are going to set you up properly. So that's a big asset that a lot of other lenders, even if they're local lenders, don't provide to their clients. So that is why I wanted to have this sit down today, because I think that's amazing. I mean, most lenders that we talk to are just saying, I don't care what happens to the seller. I'm talking about the buyer. They are my client. These are the people that I have direct relationships with. But in real estate, we have to have direct relationships with everybody in the contract.
Sure.
That's the title company, that's the lender, that's the real estate agents, that's both buyer and seller. we're putting it all together here. This is a full package deal that you're getting.
Absolutely, I think that's where so many lenders fall short. Is that we have lots of clients, and when you ask, who's our clients, that is anybody who's out buying a house, anybody who owns real estate currently and wants to have an update on where their financial situation is, so they can make some good decisions. But our realtors, our title companies, our appraisers, our inspectors.
We all have to work together.
And all of our buyers are going to eventually be sellers again. So why wouldn't we want to give them the same great advice as a seller as we would as a buyer? We're going to continue to help them be financially savvy about the decisions they're making with real estate.
So you're talking about a little bit about that too. When we have a seller who's going through the process and they're considering coming back to you, hey, we want to buy again. What if they make a lot of money on their home sale and they just want to dump all the money on their new house? Are we still talking to them at all? Or like, are we still advising them? Like, what's going on in this process? Or are we just saying we don't want this anymore, we're not going to be your lender? What's happening?
No, I mean, absolutely. We're going to still talk to you. Even if you decide to pay cash, but you have questions, call us. We'll talk through everything. We're always here for you no matter what the situation is. And sometimes financing a home is the best option for you. More often than not, it is the best option. Keep your cash money handy so that, if one of those situations comes up where you need money fast, you have it accessible to you. A lot of people are house rich and cash poor. And I think your financial advisors will agree with us in saying that that's not the best place to put yourself.
I was just about to touch on that. Most financial advisors that we talk to, and we do help our clients, sometimes they have questions for their financial advisors, but they don't know how to say what they're trying to say to get the right. We'll do a conference call with them, see if we can help them answer questions. We want to make sure they're making the best financial decisions. But you talk to your financial advisor, most of them are saying that's the only debt they do want to see you have is a mortgage. Why? Because the leverage that a mortgage is. There's no other instrument that you're finding out there that has such a great uptick, but also has the ability to spread those payments over 360 months. Nothing else is doing that for you. And so it's worth taking a look at, should I use some of my proceeds? And this is what we talk to all of our clients who are selling a home. Should I use some of my proceeds to pay off X, Y, and Z in my current credit profile? It could be just an RV, a boat, and your car, and then use what's left over to purchase the home with a small financing. You're also going to have those tax write-offs as well. So we encourage you to talk to your financial advisor, talk to your CPA, but while you're doing that, call the mortgage firm, Team Setzer.
All right, guys, so we are wrapping it up. How do we get a hold of you?
You can get a hold of me a whole lot of ways. I think we're going to put up on the front end of this some of our contact information, but here's the other beauty about this is that when you call us, the mortgage firm, Team Setzer, you speak to me and Amy right here. Okay, you call us directly on our numbers. You call us directly. We're going to speak to you, and you're not going to have 14 different people from the company talking to you. We are your direct representation. Amy's your direct between the underwriter. Best way to get a hold of us is 352-561-3035. You can call or text, come right to my phone, and I'll be sure to get back to you, or me or Amy.
So we talked about having a local office. Where is your office in relation to the villages?
We're located in Lady Lake. We are right there on 466 near the
American Legion.
American Legion, which is...
We're in the Sable Palms Executive Suites on the second floor. And we've been working in the local area. Like I said, with the mortgage firm past 7 years. We want to stay here locally and help all our people locally.
Financing is scary, and it doesn't have to be whenever you're talking to people that actually know the numbers and want to better your situation. They're not going to tell you to finance a home just because they want business or just because it's going to make their name look better because they got you a great deal. We want to have local lenders that are in our corner, that know the market, know the agents, know their clients, everything. So I'm so happy that you guys are here. If you do have additional questions, you can drop them in the comments, send me an email. All of our contact information is going to be in the description. And then in the next few seconds, I'm going to have it all on the screen as well. So thank you again, guys, for stopping by. And I'm so excited.
Thank you, Caitlin.